Yo, what's going on YouTube? It's your boy RonTrades, and we're back here in the trading video. In today's video, guys, we're going to be going over how to maximize prop firms in 2025. Now, I know I haven't posted on YouTube in about 4 months. I am sorry about that, guys. Once again, I do have a Telegram chat where I do actively teach every single student in my Telegram. So if you guys are in my Telegram chat, you know I have been more active there. But I will get back to uploading on YouTube for the rest of this year. So before we get into this video, guys, like I say, I will be going over the best firms 2025. I will be going over my trading edge, and I also will be giving you guys my personal risk management strategy on how to make $10,000 a month. Now, before we really get into this video, one, this video is not for new people. So if you're new, if you don't have a model, if you're still strategy hopping, if you're still, whatever, you're doing Mickey Mouse stuff, this video isn't for you. Don't waste your time. Click off and go watch something else. This video is for traders that have a model, that have an edge, they have a defined edge that has been back tested with case study. They have actual stats for their model that tells them that they win way more trades in the long run. This is who this video is for. I want to be clear on that. Don't waste your time if you still Mickey Mouse trading. If you're trading with demo accounts, if you're trading on paper, this video isn't for you. This is for people that's trading with real capital, or you're trading with a live prop firm account. So the first thing I want to talk about, guys, is going to be over the best prop firms to approach. Me personally, I do have 800K in capital with Exify here. This is the only prop firm that I use as of right now. I mainly trade my personal capital, but I do have 800 funded with Exify only. But Funded Pips is also a great company. Funded Next is also a great company too. And My Funded FX. These are the only 4 prop firms that I would suggest you to go to, in my opinion. Once again, guys, the only one that I use on this list is going to be Exify. Now, let's go ahead and get into my trading edge. So once again, this is my trading edge. So for the My Trading Edge session, guys, for the ones that's listening, execute your model inside of here, right? So whatever, rules that you use, whatever your plan is, just literally substitute it for mine, right? The main thing is having a plan. If you don't have a clear, defined trading edge, once again, this video isn't for you, and you should not be trading with real money, right? So let's go ahead and go over my personal trading edge. The first thing that I do, guys, and I will show you guys a live example at the end of the YouTube video that I did take live, and I did post in my Telegram chat and my Instagram channel also. So the first thing that we look for, guys, is going to be identifying premium and discount market. This is the most important thing of my trading edge. I need to make sure that I am in a clear premium or a discount market. Now, the second rule is going to be I need to see Asian low or Asian high swept. So what does that mean, Ron? If I am looking for a buy setup, I need to see Asian low swept. If Asian low is not swept, then it's nothing for me to do. Now, let's say if I'm looking for a sell setup, I need to see what? I need to see Asian high swept. That's non-negotiable. I don't care what someone else saying. That's non-negotiable. If those things are not adding up, there's nothing for me to do. My third step to my trading plan is going to be clear London displacement. I need to see clear London displacement. For me, my London session time starts from 2 a.m. to 5 a.m. So I need to see clear displacement going in my direction from 2 a.m. to 5 a.m. The next thing we want to see is going to be very simple. We want to wait for a New York session OTE retracement with high impact news. So once again, wait for a simple New York session OTE retracement, and our entries come at the 0.62 level. And right here, guys, this is personally for me. I only trade on Thursdays. If you guys have been watching my YouTube channel, if you guys in my Telegram chat, you know that Thursday is my best day. Every single Thursday, my model forms. Once again, I'm not up here to, tell you what my model is in this, but every single Thursday, my model will form. I don't care what someone else say. I don't care what someone else is doing. I don't care what some guy in the live stream is doing or Instagram. My model will form every single Thursday, and it will not stop. So that is my trading edge here, guys. Once again, you can substitute my rules for yours, but you need to have your rules written out, plain, and in sight. If you do not have a step-by-step what to look for in these markets, you should not be touching a live account, a funded account, a phase one, you shouldn't be doing none of that if you don't know exactly what you're doing. Once again, I don't care what your mentors say. I don't care what these gurus say. Listen, if you do not know exactly, and I mean if you don't know exactly what you're doing, you are gambling and you're going to fail. I'm a realist. So keep that in mind. Next, guys, let's go into risk management, right? So we're going into risk management for a 400K account. Me personally, guys, I'm going to just go ahead and say it right now. As you guys know, I'm very transparent and I don't care what anyone say. You need to be trading with 100K and up. 10K accounts, 25K accounts, 50K accounts. If you have a model, if you have an edge, you have no business trading those small accounts. If you're looking to get rich and make money, because that's why we're here. We're not here to, you know, say who's the best. We're here to make money, right? And we want to make a lot of fucking money. That's why we're here. You need to be trading with 100K capital and up, right? Anything lower than that, like I say, in my opinion, wasting your time. Just get you a 100K account and up so you can actually maximize prop firms while they're still here. So, going to be giving you guys my 400K risk management plan. This is exactly how I approach my phase 1 and phase 2. And this is also how I teach my students in my Telegram chat how to do the same. So, for my phase 1 and my phase 2 account, so we just bought a fresh 400K account from Exify. On my first trade, and keep in mind, guys, before I move on, every trade is A+. I'm not taking low quality trades. I'm not taking trades just because I'm bored. I'm not taking trades out of boredom, you know, just because I need something to do. No, all my trades are calculated. They're A+, deep premiums, deep discount, right? I'm looking for the best of the best setups. If that means I got to wait 2 fucking weeks, guess what? I'm going to wait 2 fucking weeks for an A+ setup. So keep that in mind, guys. Like I say, no gambling, no Mickey Mouse stuff over here. Everything is calculated. So for our first A+ trade, we're going to be risking 1%. It's going to be $4,000 of my 400K account. Now, let's say that trade wins and it goes for a 3R. We're going to be up 3%. It's going to be $12,000 in our 400K account. So we're now up 3% on our account. That's our buffer. So the main thing, guys, is going to be creating the 3% buffer. So until we get up 3%, we cannot risk more than 1% until we have a 3% buffer in your account. So if you have a 100K account, you can't risk 3% or more than 1% until you have $3,000 in your 100K account. Whatever account size you're using, guys, just like I say, add it to this. So the second rule here is going to be once the account has 3%, once again, $12,000 buffer, then we're going to be risking 2 or 3% on our next A+ trade. So with the Exify targets and the funded pips, most of these companies are going for 8%. So you only need an 8% target for phase 1. Once again, you're already up 3% off your first trade. You have a 3% buffer. So on your next trade, you're going to be going in with either 2% or 3% on that next A+ trade. The reason that I teach it like this, guys, is because you want to make sure that if you're going to be, you know, taking on more risk, you want to make sure that you have a buffer in your account. We're not just buying an account and, you know, risking 3%, 2% right off the first trade. That's gambling. That's what these Mickey Mouse traders do. They blow their account and then reset. That's what they do. No, we're not doing that. We're going to be risking 1% until we have a 3% buffer in our account. Once we have that 3% buffer in our account, then we have the right to risk 3% or 2%. Because guess what? If we lose that 3% trade, what's going to happen? We're going to be back at break even. That's okay. We're going to just repeat the same steps again. Go back to risking 1% until we have that 3% buffer again. Then we're going to go all in again. So you see the difference between actually, you know, calculated smart risk instead of just buying a fresh 400K account and going up 3%, going down 3% and drawdown off the first trade. That's gambling. So now let's go over. So what happens when drawdown occurs? So let's say we lose and we go in drawdown, because that can happen. We take losses. Everyone loses. No one's perfect. Sometimes we go in drawdown. The way that I teach and the way that I approach the market, I am ready for a drawdown. So when drawdown approaches me, I'm not blowing my account. I'm not trying to gamble and get out of drawdown in one trade like these Mickey Mouse traders do that don't make real money. No, when I go in drawdown, I'm going to be reducing my risk to 0.5. Yes, 0.5. So I don't care if it's the best of the best A+ setup. I can't risk more than 0.5 while I'm in drawdown. So once again, if drawdown occurs, you're going to be risking 0.5 until we're back at break even, or pretty much back at our initial starting balance. And right here, we're going to be pretty much repeating the first step over until the, you know, you pass your challenge. So very, very, very simple approach. Once again, let's go over it one more time. For phase 1 and phase 2, to keep things simple, we're going to be risking 1% until we have 3% in our account. So if you have a 100K account, you're going to be risking $1,000 until you have $3,000 in your account. Once you have $3,000 in your account, that's when you can go all in and risk 2% or 3% on your next trade to go ahead and go for that 8% target or that phase two 5% target. And you should, go ahead and get that done. Now, once again, I want to start right here too, guys. I'm gonna just repeat myself again. This is for people that have a defined edge. This is for experienced traders. This is not for new people. This is not, if you just learn how to trade, this is not for you. Right? So I want to be clear on this. This video is not for everyone. This is only for serious traders that know exactly what the fuck they're doing. This is who this is for. All right. So now we're going to go over into the live account. So let's say now we have passed our phase 1 and phase 2. We're now at the live stage to make real money. On our first trade, since this is live capital and most people can't, control themselves when they get live capital, or most people get the live account and they shit on it and they absolutely blow it. The first trade on our live account, which is all A+. Keep in mind, guys, every trade is A+. We're not taking any shitty setups. Everything is A+ trades. On our first A+ trade for our live account, we're going to be risking 0.5. So we're going to be risking $2,000 until I'm up 3%. So we're not going to risk 1%, 2%, 3% until we have a 3% buffer in our account. So we're going to be risking 0.5 on every single trade until we have 3% buffer in our account. What that's going to do is it's going to give you mental capital. It's going to give you, the confidence to execute on your trades, because when you get these live accounts and you try to over leverage and you try to go in and hit big on the first trade, you're fucking gambling, and you're going to lose that account. I don't teach that shit. What I teach is reduce your risk when you get the live account so you can actually keep the fucking account. That's what it's about, keeping the account and being able to profit monthly from it. So once again, once you get that live account, you're going to be risking 0.5%. For me, it's going to be $2,000 until I'm up $12,000. So I can't risk 1%, 2%, 3%, 4% until I'm up $12,000 in my account. So every time we get up 3%, stop trading. Listen, when you hit 3% in your live account, stop trading and make some money and take that shit out. Don't just leave it in there and try to go 10 and try to go 20 to try to make these big boy payouts. Bro, if you're trading, this is why I say capital is important. If you're trading with Mickey Mouse 10K accounts, Mickey Mouse 50K accounts, yeah, that money is not a lot to you. But if you're trading with 400K capital, that's 12 grand a month. Your 9-to-5 job don't pay you that. Whatever else you're doing don't pay you that. And keep in mind, guys, you're only taking 1 or 2 trades a week. So you're literally making $12,000 off 2 to 3 trades a month. This is why I say be careful who you listen to, right? Be careful who you listen to in this industry. Most people are talking a lot of bullshit, and a lot of you guys are literally falling for it. It's very easy to go in and approach these prop firms in the most simplest way. The only thing that you need is respectable high capital. Once again, if you're trading with Mickey Mouse capital, you're always going to be forced to go for big percentages. If you're trading with a 10K account, 3% is only $300. In the USA, in the United States of America, that ain't going to do you nothing. And you know that. So you're going to be what? You're going to try to go for 10%, 15%, 50%. And you know that takes a lot of mental capital to try to do that. Instead, if you had a 100K account, 200K account, 400K account, 3% is very doable and you can easily stop there. Now for the last step, guys, we're going to be going over once and drawdown. So let's say you occur drawdown in your live account. You're going to be reducing your risk to 0.25. So it's going to be $1,000 and you're going to be risking 0.25% until you're back at break even or your initial balance. So this is my blueprint for my students and myself of how to approach prop firms in 2025. Also, guys, I know a lot of you guys are like, oh, he's just talking. Bro, go to my Telegram chat. Go to my Instagram where I post real whoop draws, real payouts, 24K market, X5. Go watch all my stories. Like I say, I'm not up here to just run my mouth. Everything that I talk about, I've already done. So yeah. And last but not least, guys, the goal is going to be 3% monthly. So when you get these live accounts, you want to aim for 3% monthly. If you have a 400K account, you make 3% monthly, that's $12,000 a month. Who the fuck is going to say, oh, that's not enough. That ain't enough. I need more. This is why I say you need to get your capital up. Get your capital up ASAP. Because when you get your capital up, you don't need 10%. You don't need a 10R like these demo paper traders are talking on YouTube. You don't need 10Rs. You don't need 20Rs. These guys do not make real bread. I swear to God, they don't make real money. Only thing you need is 3% a month on a 400K account. That's $12,000 a month. If you have a 100K account, that's 3 bands a month. So, once again, be careful who you take advice from. So now that we've been able to blueprint, let's go over real quick my trading edge. Real simple. We're going to be going over a setup that I took last Thursday. Once again, before I even talk, go check my Telegram. Go check my Instagram. Withdrawals were posted. Go check all that, please. Right here, guys, it was a A+ sale model. I came into this day with the analogy that we're in a deep premium market. As you can see, we have nothing but retail traders going to be looking to buy this. They're going to say, oh, it's an uptrend. Once the market is in a deep premium and we are above old highs and previous session highs, I'm no longer looking to go long. I'm not chasing uptrends, right? So with that being said, I already identified my what? My first rule is what? Premium and discount. We're in a premium market. What's my second rule now? I need to wait for what? Asian high. Now let's go ahead and mark out Asian high. Where was Asian high? Asian high was here. One second. Let me pull up my session 2. Asian high was here. 23.45. As you can see, we purged Asian high at what time? 1:15 in the morning. So right at the beginning of London session. So Asian high purge. What's my next rule? I need to see what clear London displacement. Do we see clear London displacement? Yes. What's my next rule? New York session OTE, drawing my fear from the wick to the current low here. As you can see, I got filled at what time? I got filled at 5 a.m. As you can see, price attacking the previous session lows, going for a nice 3R. So very simple. This is my trading edge. Once again, guys, it's not about my trading edge. I want to make this video just to let you guys understand how if you have the edge and you have the skill set, you can do whatever the fuck you want to do in these markets. Stop listening to these little Instagram guys, these little fucking YouTubers that sell courses and they sell signals. They're making money from that shit. They're not making money from a real blueprint of trading. So I know this video probably won't be like your favorite guru and it probably won't be as entertaining. I'm not here for entertainment. I'm here to make fucking money. I'm here to maximize my skill set. I'm not here to entertain you. So with that being said, if you guys are not in my Telegram chat and you want to join, just check the link in the description. It's free. And also go follow me on Instagram. I post my trades every single week and I post real withdrawals. I'm going to catch you guys in the next video. Once again, I will start back uploading on my YouTube channel. I wish you guys the best and I hope 2025 is the best for all of my viewers. Peace.